And let's give a warm welcome to Francisco for the next talk on crafting tomorrow's finance.
Hello, everyone. So, crafting tomorrow's finance. So powerful, right? And if you're in this room, you're being part of it. How? You're using the blockchain. You're building on top of the blockchain. You're powering the actual blockchain. The blockchain brings a lot of possible improvements to the current financial system that we have. It brings the possibility to give 1.4 billion people that are now a bank in their pocket. It gives the possibility to increase transparency in a centralized system controlled only by a few. And last but not the least, it gives the possibility to make the system more efficient. The thing about possibilities is that they don't naturally come true, right? For a possibility to become a reality, they need to have some incentive behind it. And that's exactly why I want to point out the last point again. The current financial system, it is inefficient, and if we bring the right tools for it to be more efficient on-chain, we'll be creating the incentive for the movement to happen. And by having that financial system on-chain, on top of an actual blockchain, we'll be making the financial system more inclusive for the unbanked and more transparent for the end user, just by using blockchain's nature. And that's what Request Network has been doing for the past 6 years. We are building the protocol, the tools necessary to make that change happen. We create the incentive to make the change to change the financial system from off-chain to on-chain, to push it forward. But I've talked a lot about inefficiency in a very general sense, so let's dive into what kinds of inefficiencies that I'm talking about in the financial system. We all here know the problems about payments, right? Payments, the problems of payments have been part of 90% of the white papers and 100% of the first talks you had about Bitcoin. But still, transfers do take one working day between different banks in the same country. Global remittances still have an average of 6.25% fee, and cross-border payments still take up to 5 days. And the inefficiency I want to mention here is the amount of intermediaries. A remittance has on average 4 intermediaries, and that's what drives the cost up and delays the whole process. But moving more into the company side, companies still suffer a lot from, companies are the main, suffer the worst actually from the current financial system, especially smaller companies. So starting by invoicing. Invoicing burdens are a hell for medium-sized companies. Having to, doing the remittance between the payment and the invoice and tracking down unpaid invoices is a process that it's very manual still and costs in average $16 per invoice for a medium-sized company. That combined with the manual process causing a lot of mistakes causes a lot of delays in invoicing payments. And every year, because of those delays, thousands and thousands of small and medium companies go bankrupt waiting for their invoices to be paid. Accounting. Accounting is like the backbone of integrity of our financial system, right? But it's filled with bureaucracy, costly compliance, and costly audits. 42% of all the money spent into accounting and auditing is just for compliance. Companies registered in the SAC spent $18.7 billion in audits in 2021. And this is money it's for operational work, it's to keep the system, it's not for value-added activities. And despite all the money that you put in there, you are not going to solve the problem, because the problem it can't be solved by money. You need to change the actual foundations. And you can see it because despite all the efforts and all the money thrown at it, 41% of the public companies commit accounting violations in an average year. Also, in an average year, 10% of the public companies commit securities fraud. And I know it's easy to understand how blockchain can solve, especially the payments part, right? Blockchain is famous for cutting down intermediaries. But the invoicing and accounting part are a little bit harder to grasp. And that's where request network comes in, to complement the actual blockchain into solving some of these problems. Request network at its foundation is an infrastructure for you to add data to your blockchain transactions. This data is normally added in the form of invoices. So you basically can get an invoice for every transaction that you get, and you do. This invoice is connected to the payment itself, so it updates depending on the payment. You can pay it on partial payments. It's very adjustable. And the data of the invoice and the payment gets stored in request protocol that you can see there as a kind of a ledger. The thing about request network for context is that it gives a lot of context to businesses working on top of chain. It allows you to move a transaction, to go check a transaction that you made in the past that nowadays looks like this, into looking like this, which is a lot more data and can help, especially tracking down your invoices and your accounts. And it actually solves a lot of the invoicing burdens, because having the payment connected to the invoice automatically does the reconciliation of that invoice, and unpaid invoices are very easy to track. But we are not a payment application, and we are trying to create and enable two major updates to the system that we have now on a regular blockchain. And the first one that I want to mention is on-chain reputation. If you start dealing your payments and invoices through request network, you start getting your financial data on your own ownership on an immutable and decentralized ledger. And by doing that, you enable the possibility of creating a reputation for yourself or for your company, and the possibility to share that reputation with other entities. So in the case of the small companies that I previously mentioned that go bankrupt waiting for invoices, before accepting a deal with a company, they can ask for this reputation for the other company and see if they actually pay on time and pay at all, before wasting all their efforts in a deal that's going to be paid late and it's going to bring them to bankruptcy. It brings also a lot of different other possibilities. If you think about it, when you want to get a loan, when you go to a bank nowadays to get a loan, they ask you a lot of things, right? You have to provide your gains statement, so your assets, your credit history. And to enable that on top of Web3s, if you really want to have the financial system on top of Web3 to make it more decentralized and inclusive for all those reasons, we need to have some kind of reputational layer here where you can share that data and you can have an actual uncollateralized loan here on top of the chain. But it's not the same as Web3. We are not trying to copy what's been done in Web2. Actually, in Web3, things are way more, promotes way more equality for these kinds of services and way more opportunities to everybody. Let's take the case of invoice factoring. We do have some builders on top of Request working on this case, so I'm kind of familiar with it. Invoice factoring is a 2 trillion market in Web2. But for some reason, also, of course, it's about the volume of invoices and the type of risk. Only big companies can really access invoice factoring. If we bring it to Web3, we stop being dependent from the big investors that are the ones that offer the invoice factoring products. We can create a decentralized product that can offer invoice factoring to get liquidity from retail investors or smaller investment firms. And we can start promoting those use cases and helping smaller companies and medium companies that want to get access to liquidity because of the flaws in their cash flows. The other major thing that Request is enabling is the triple entry accounting. I don't know if you're familiar with it, but triple entry accounting picks up the double entry accounting that we use nowadays and adds it a cryptographic proof in a shared and immutable ledger. So let's take a look at that example. Alice's company makes some kind of deal with Bob's company. There's a transaction between them. And in the double entry accounting system, that transaction is registered only in their own books. So Alice makes the registry in her books, and Bob does in his books. But errors can happen, right? Books are cooked, and triple entry accounting, having a ledger, a shared immutable ledger in the middle, solves that. So I'm not saying that it will completely end all inefficiencies, but triple entry accounting does give the possibility to have immutable records of your financials, which can really end like 90% of the fraud. Because now if you want to commit fraud, you can change your records. If you make it immutable, it's really, really hard. It also enables real-time verification of the transactions. You don't have to have pending times or waiting periods to get to someone's accounts. And lastly, it can bring a lot of automation of the things that today consume all those funds and all that time. Things like automatic audits, automatic tax reporting, financial statements by clicking a button. This is the future of finance. We just need, and Request Network is trying to push it forward, but we need people coming with us and builders on top of our ecosystem. So basically, this is just a small scheme of what we think the Request Network ecosystem will look like in the future. But in order to enable that, let me give a small update here about also give a bit more context about Request. So Request is a non-profit foundation. We have created infrastructure, but we are not creating products for the end user. We don't want to actually create products. So we are onboarding a lot of builders to come build projects using our infrastructure, creating this future that we imagine, because we don't want to be competing with the other actual businesses on top, and we want to stay a non-profit. On your left side, you can see that I've put in here the accounting, invoicing, and payment apps, because those are the ones that will initiate the movement. So if you start collecting data, of course, this data is on the user's ownership, but made through Request Network, we never get access to that data. You can then start creating different products on top of that data that will facilitate the financials overall on top of the blockchain. To our builders, what we can provide to them is our infrastructure, which is almost free. We do have a maintenance fee for writing the data on the protocol. And we have facilitated a payment infrastructure and invoicing infrastructure for them to use with a lot of different tools. We support integrated swaps in the payments. So if you want to settle an invoice in fiat, but you want to pay in Ethereum and the other guy wants to receive in Link, he can. We support escrow and streaming payments through Superfluid, and we allow you to be able to pay just by clicking a button and batching different transactions into one. We support all EVMs, pretty much all EVMs and NIR, and we are a bulletproof. We have been bulletproof for 6 years, and with $400 million in volume. We also have a grants program for the builders on top of Request, and we provide technical and marketing support and introduction to some of our builders if you think you want to create some kind of synergy. So what's missing to make this happen? It's missing you, it's missing builders, it's missing adoption. We are having a lot of adoption, but if we want to make it to move the whole financial system, we need to all start building together. My name is Francisco Pinto. I'm the protocol lead at Request Network. Thank you.
Okay, are there any questions from the audience? Not all at the same time. Yes, here we go.
Thanks for the talk. The reputation score looks really interesting. I was wondering, how do you solve this one against possible fraudulent claims, where somebody makes a claim for a payment which is invalid? And does this affect the score in the end?
So that's a good question. We do facilitate the possibility for the receiver of the request to approve it, and we only start counting the score after that is approved. So if you get spammed with invoices that you have not approved yet, you can remove it from the credit score. It's not going to affect your credit score. So if it only affects your credit score, so we are not the ones building it. It's one of our builders that's actually building it. But on the protocol, we do support that. We do have this approval of the invoice that allows you to approve only the invoices that you are going to pay. And then if they are approved and you miss the date, it can hurt your reputation. But if it's not approved, it can't do anything.
Makes sense. Thanks.
Sure.
Okay, in that case, thank you. Thank you.
Thank you, everyone.